Hi, this is James Shug at Westpac with the London End of Day report for Friday, December the 7th. Well, the European session didn't start off too well. We had the German Bundesbank, following on from the European Central Bank yesterday. The Bundesbank revised down their forecast for the German economy. They're looking for just 0.4% growth next year, and down from I think it was 1.2% previously. They've also said that they expect the current quarter, the fourth quarter of 2012, to be one of contraction, and a flat quarter in the first quarter of next year. So that means that there's less prospect that the core of Europe will be offsetting weakness in the periphery of Europe with modest growth in the core. That won't be happening, at least from Germany's perspective. So that underpins the weakness that's in prospect for the European economy going forward. And on that point, we had industrial production figures for October for Germany, down 2.6%. That's the third straight monthly decline. Also, the annual pace of decline at 3.7% negative is the steepest pace we've seen in Germany since the recession of 2009. In the UK, industrial production was down 0.8% in October, also the third straight decline, and it was driven by a 1.3% fall in factory output. So weakness in the industrial sector across those two key European economies. In the US, there was a positive surprise on the jobs market there, with payroll employment up 146,000 in November. There were downward revisions to September and October. So the 3-month average pace in September to November is 139,000, exactly the same as the prior 3-month pace, June to August. That's up from, what was it, 99,000 a month in the March to May 3-month period, but down on the, the 252,000 per month average in the 3 months to February. So basically what I'm saying is that there was very strong, relatively strong jobs growth in the US at the start of this year. It slowed towards the middle of the year. It's picked up a bit since then, but you'd only call it steady to moderate jobs growth, and certainly not as strong as the surge that we had in employment in the late part of 2011, early 2012. The Labor Department said that weather wasn't a big factor in the report. The unemployment rate fell from 7.9 to 7.7%, although that was as much to do with, well, actually it was to do with falling labour market participation. That's been an issue in the US of late. Unemployment would be quite a bit higher than 7.7% if labour force participation hadn't declined. In the detail too, retail jobs in the last 3 months running their fastest pace of increase since 1996. That suggests that there might be some downside ahead for retail employment, certainly in the early part of 2013, if the shopping season doesn't live up to expectations, and it may not because of the disruption from the storms. Consumer sentiment on the University of Michigan Index, their preliminary December number, fell from 82.7 to 74.5, pretty much wiping out the last 3 months of gains. It was driven almost entirely by expectations, fell to their lowest for the year, but the present index was down a bit too. Canadian jobs, big jump there, 59,000 up in November, and the unemployment rate fell to 7.2%, which matches its low point since the 08-09 recession. That's it on the news front today. Nothing really fresh out of the fiscal cliff negotiations. In fact, the Dow in the US has kind of been up and down a bit today. It's up about 0.4% at 7 o'clock in London in the evening. Apple's down. That's pulled the Nasdaq down. It's actually down 0.5% at the moment. Fiscal cliff concerns persist, and we had the mix of data with payrolls looking okay, but consumer sentiment, as I say, revised down. European markets struggled though with the weak industrial production numbers I mentioned earlier and the downgrade to the Bundesbank's forecasts. The FTSE up just 0.2%, the French market up 0.1%, the Germans down 0.2%, Spain is off 0.8%, and so is the Italian market at the close. Commodities, we've got oil down 0.3% at $86 a barrel. Gold's up 0.2%, just back above $1,700 at $1,704 an ounce, and copper's up 0.5% today. The Aussie dollar is at 1.048 against the US dollar. It's little changed. Okay, that's the end of the report for this week, and I'll be back next week.